We are back, and we were able to work out the technical audio difficulties that we were having. So we're ready to go now. Today we've got a very special guest. We got Michael Quinn. He works with Sierra Pacific. He's a VA specialist. If anybody knows and understands VA loans, Michael Quinn can get it done. Not only is he a VA specialist or someone that does a lot of VA loans, at the same time, he's actually a veteran himself, which is one of the reasons why he's taken a special interest in serving our military. So a little bit about information about Mike. He's been in business since 2004. He started off as a lender, and then he switched to a loan officer. And he was involved in the Gulf War. His father was in the Korean War, and his uncle was in World War II. So, Michael, say hello to everybody.
Hello, everyone. Thank you so much, Jose Luiz, for inviting me on this call. And my uncle, he was not only in World War II, but he flew 126 Hellcat missions. So he was a decorated pilot in the war, and I myself served during the Gulf War for the U.S. Navy. So thank you so much for inviting me onto your show.
No, thank you for giving us the opportunity to learn off you and really just pass on some information and some wealth to everybody out there. So it looks like we're getting some hearts already, Mike, on Facebook. I see a lot of hearts. So I think that people like that you served our country. So thank you for that. So
I'm honored. Thank you.
Let's start off by jumping right into the question. So in terms of eligibility, what does somebody have to do in order to be able to qualify or be eligible for a VA loan?
That's a very good question. I get that quite a bit. I have some veterans that come up to me to say, Mike, I served in the military. Am I eligible? Well, the first obvious answer is you have to have anything but a dishonorable discharge. So any type of discharge is enough to get full VA entitlement. As far as time served, if you enlist into the military and you have a 4-year commitment, you have to have served at least 90 days if it's during wartime. If you commit to a 4-year commitment and you serve 2 years during peacetime, you're eligible. If you enlist as an active reservist where you serve no active full-term time, you're eligible after 6 years. So I have a lot of reservists that I do loans for that would do like the weekend warriors we call them. If you're in for 6 years, you're eligible. During the wartime, after 90 days, you're eligible. And if it's during peacetime, only after 2 years active duty, you're eligible.
Good. So it sounds like it just varies depending on the type of duty that they're currently under and whether or not we're in war at that time.
That's correct, yes.
Fantastic. Okay, so essentially if we're during wartime, somebody can essentially purchase a home 90 days after being enlisted in the military.
That's absolutely correct. We've done that before. Yes, after 6 months. Not only that, they have more pay. They have combat pay, so they actually make more money. So we can use that no matter how long that's going to continue. There's no continuous seasoning period for combat pay. So it's not like other types of pay, like alimony pay or this type of pay or Social Security, where it has to continue for 3 years. You can use combat pay from day one. So that helps, in some cases, get some buyers over the top. Yes. But let's be in peace now.
Yeah, it's a better time for everybody. That's good.
That's right.
And I want to open it up to everybody. I know that we've got some live listeners, so if anybody has any questions, if anybody likes what they're hearing, give us some likes, give us some loves, or even share the screen. If you know of somebody, some of your friends that would benefit from this type of information, share the screen, share it with your friends, share it with your family, let other people get informed or get the information that they need. And if you're interested, this would be the time to ask Michael. We're taking live questions. So what is a certificate of eligibility, Michael?
That's another good question. That's a form that we lenders use to determine whether or not a borrower is eligible for VA financing, and if so, how much. Mm-hmm. Now, when we order a certificate of eligibility, there are 3 things that we're looking for. Number 1, their entitlement amount. Their entitlement amount will let us know how much they're entitled to. Is it 100% financing? Is it less than 100% financing? The second thing we're looking for is the funding fee waiver. Is the soldier waived from their funding fee? Now, when a VA borrower buys a home, there's a 2.15% funding fee that's added to the loan. That goes back to VA to cover any costs from other loans that they did that went into default. It's sort of like insurance for them. If a borrower has any service-related disability, any at all, where he collects at least $389 a month in disability, he's waived from that funding fee. About 40% of the VA loans that I do, there's no funding fee attached because the borrower has a disability. And then the third thing we look for on a certificate of eligibility is the branch of service, Army, Navy, Air Force, Marines. So those are the three things we look at. We get it back in 1 minute from ordering it. So once we get the information from the veteran, we put it into the VA portal. In 1 minute, it kicks back and lets us know the eligibility of the veteran.
Okay, and that's pretty much a basic requirement. Like without the certificate of eligibility, someone can't buy a property, right?
Not with VA financing.
Not with VA financing. Okay, and we've got a question. Jeff Colon, he's an agent from Northern California, one of the top agents up there. And this is probably a question for me, is can a veteran buy a fixer-upper with a VA loan, or would you mind elaborating on that, Michael, like some of the requirements on that?
Here are the caveats to this. Number one, they have to occupy the property, God help them, right, at a fixer-upper. And number two, it has to pass the VA standards in regards to termite inspection. All VA loans, 100% of them, require a clear termite report. And number two, the VA appraiser is going to note any health or safety or habitability issues with the property. If it passes those, and there's other standards of fixer-upper that are not deemed by VA, absolutely. Health or safety has to be adhered to. Structural integrity has to be adhered to, and the appraiser is going to note that in a clear termite report. So those are the main things: appraisal and termite report.
Okay, so basically he has to come back. And is the veteran the person that pays for any termite work, or can they pay for any of the termite work? Like, for example, if the seller chooses not to pay for it?
No, absolutely not. As a matter of fact, the termite report is the one non-allowable fee, no matter what, that the veteran cannot pay for. The work has to be done from an agreed party, and the termite report has to be paid for by an agreed party. With the Quinn team, we always pay for the termite report for our veterans, but the work has to be paid for by whoever's going to do the work.
Somebody else.
So, absolutely, yeah.
Good to hear. Okay. So what's the main difference between VA financing and, let's say, an FHA loan? Like, what are some of the benefits of someone having the eligibility of using a VA loan versus like a traditional FHA or conventional even?
Good question. We'll compare them government to government loans. So FHA versus VA. The first thing is if you're eligible for VA and you're within the loan limits of the county, it's 100% financing if you have full entitlement. That's huge. FHA requires a 3.5% down payment for standard FHA loans if you're not going with any government bond programs. So the first thing is down payment requirement, 0 versus 3.5.
That's great.
The second thing, Jose Luis, and this is huge, is mortgage insurance. VA has no monthly mortgage insurance on their house payment. And FHA has 0.85% of the sales loan amount monthly as mortgage insurance. So the same $300,000 house would cost the client, as far as a monthly payment, about almost $300 less a month for VA. And the $300 difference, there's two things that happen with that $300. Number one, the payment's less, that's important, but their amortization is quicker. So after 5 years on a VA loan, both the same loan amount, $300 versus $300,000, they're going to have a lower loan balance in FHA because FHA's mortgage insurance, it kind of delays, or we call spreads, the amortization because it's a fee, and you're paying the loan down in a shorter amount of time with VA. So it's much nicer. So let's say a veteran after 5 years, his next door neighbor has the same loan amount, FHA loan. The veteran is going to have a lower loan balance. And what does that mean? It means more net worth.
More equity.
It means more net equity. Yeah, if he's going to sell the home, he has more equity. If he wants to refinance, he has more equity.
That's great.
So it's the best loan ever.
Yeah, well, I mean, if you can get it with 0% down, meaning no money down, and you don't have mortgage insurance, which under a normal circumstance, you either have to go, 20% down minimum to get no mortgage insurance, or there's other loan programs where you can do it, right?
Well, you can, but if you're less than 20% down, Jose, you're always going to be introducing mortgage insurance into the equation. But what happens is when you put in less than 20% down on a conventional loan, There's ways to eliminate the mortgage insurance by increasing the interest rate. It's called lender-paid mortgage insurance, which is often a lower house payment than standard mortgage insurance. But with 20% down on a conventional loan, you're not introducing mortgage insurance at all to the equation. On a VA loan, no mortgage insurance at all with zero down payment. It's great. The best loan ever.
Yeah, absolutely. Good.
Yeah.
Okay, good. And so is there a way that a veteran can get more than one VA loan? Like, can they have multiple VA loans at one time, or are they required to just have one before they can buy something else?
There's a very, very, very rare instances where a veteran can carry a VA loan and get another VA loan, like in a case of emergency or family distress or their mother's in a hospice, but no, absolutely not for the other cases. As a matter of fact, there's a process called reinstatement. We do that quite a bit when a veteran's moving from a house and having to sell it and buying another house and has to use his VA eligibility, but he's carrying a VA loan. It's called a reinstatement. So once his current loan, VA loan, is paid off, we do a reinstatement with VA, which takes 24 hours, and then he's eligible for the next home loan. You can actually run them concurrent. Jose Luis, let's say you have a seller, and that seller has a VA loan, and he wants to buy another house using a VA loan. You can run those two escrows at the same time, but they'll have to close one day apart because the closing of the house that you're selling, we have to do the reinstatement, and then it just goes into play. It doesn't delay the loan from the other property. It just has to be put in play before we can fund the other property.
So basically, it has to close first before they can actually buy the next property with the next VA loan.
We have to get that payoff in order to request the reinstatement from VA.
Fantastic. Okay, good. And what's the maximum financeable amount for VA loans? I know that FHA has a limit. Is there a limit for VA loans? And if so, what is that?
Absolutely. You can go to va.gov and you can put in your county and it'll let you know the county loan limits as far as your maximum financing. VA has a higher maximum loan to value than most other loans. So if you're within the conforming loan amount, let's say 417 for California, or even the high balance conforming loan amount, let's say 636 in California, you can get 100% financing if you have 100% entitlement. If you exceed that, it's called a jumbo VA loan. And there's a little calculation that we use that determines the maximum loan to value for a jumbo VA loan. Most of the time, we just did a loan in Solvang. The sales price is like $900,000. The borrower put 10% down on a $900,000 loan for VA.
Wow.
90,000. Yeah, it was like 810 loan amount. His interest rate was great. So to answer your question, if it's in the conforming loan limit, 100%. If it's jumbo, it's typically anywhere between 5 and 10%.
That's still good though.
Great. Yeah.
Yeah, absolutely good. Okay. And can a borrower buy a property with someone besides their spouse? Like, can they use a friend as a co-signer, a family member, another family member as a co-signer, or can it only be their spouse? Okay.
Absolutely not. It has to be their spouse.
So there's no way around it, no if, and, or buts.
Nope. There's no one other than the veteran and his or her spouse that can be on a VA loan.
Okay, good. And this just came up in my head because I know that with FHA, they use potential rental income when you buy units to help you qualify for more. Do they do something similar for VA loans as well too?
They did. They do. They did. Past tense. If you're buying a duplex and you're buying it owner occupied and the other unit is occupied, you can absolutely use prospective rents to qualify.
Okay, so those rents, projected rents, they can use them and help them qualify for something in the future.
That's correct. Yes, sir.
Good. That's great. Okay, good. Do I have to be married if I was a veteran to buy a home with a VA loan?
Well, you have to be a veteran to buy a home with a VA loan. I'm not sure if I understand the question. No, you can be single and buy a home with VA loan. Yeah.
All right, sounds good. Okay. And if someone filed for bankruptcy, short sale, foreclosure, I know that in the previous market that we were in, 2010, 11, 12, there's a lot of people that went through those kind of things. Typically, how long would they have to wait to be able to purchase again? Or can they even
That's a great question. Again? Yeah, that's a great question. It's the rule of two. So for everything there is that's a distress, short sale, foreclosure, bankruptcy, 2 years, 2 years, 2 years across the board.
So if someone had a short sale in 2014, essentially they could be back on the market already.
Correct. Yes.
Good. Okay. Lastly is who pays for the appraisal on a VA loan?
Well, the appraisal, that's a good question. The appraisal, if it's a non-allowable fee, here's how it works with allowable and non-allowable fees, Jose Luis. If the veteran has to pay a 1% origination fee, so some banks
You're cutting out, Mike.
And the non-allowable list is huge. Oh, can you hear me?
Yeah.
Let me,
yeah. You're good.
Okay. So let me know if you can hear me. My battery's low. So so if the bank charges a 1% origination fee, there's a whole laundry list of non-allowable fees for the borrower: notary, appraisal, escrow fees. However, if the lender does not charge a 1% origination fee, and we do not charge a 1% origination fee, the only non-allowable fees for the veteran are the termite report, some of the like realtor fees, like there's some realtor offices that charge fees, and a couple other fees. So the appraisal, yes, they pay for it if the lender does not charge a 1% origination fee, and no, they don't pay for a lot of things if the lender does charge a 1% origination fee.
So it sounds like it's a better option if the lender doesn't charge the 1% origination fee.
Yeah, because they don't. That's right. Yes.
Good.
Absolutely.
And you guys don't charge that 1% origination fee?
Never have, never will.
Sounds good. Okay, good. Anything else, Michael, that you think would be important for our VA listeners or anybody who's getting a VA loan that would be helpful for them to know? Anything else?
Yes, the first thing is if you have any questions, or I get a lot of clients that are scared or they're not sure about their credit or not sure how it works. The minimum credit score is 620 to get a VA loan. We use a debt to income calculation to determine your affordability. So all my buyers, first time home buyers, any type of buyers, they're kind of unsure going into the process. So if you have any questions or you want to see how your credit is or if you qualify, you're always welcome to reach out to me. I'd be happy to run your credit. What we do is we do game planning for our clients. So we don't necessarily go, oh, here's a pre-approval, go house hunting. We do an assessment to see where you stand. We help you budget. We construct a game plan for you. So if you're worried or not sure, feel free to give me a call. Give Jose Luis a call, and we'll help game plan and put together a structure for you to help you get there to become a homeowner. Because owning a home is the greatest thing ever. I've owned 6 of them. And I'll never forget my first one. It's the best feeling ever. And I hope Jose Luis and I can help you with that opportunity.
Yeah, absolutely. Good, Michael. And if they want to get a hold of you, what's the best way for them to do that?
My cell phone, you can call me direct 7 days a week. I'm very accessible. That's area code 805-232-8796. That's 805-232-8796. And just a quick testament, Jose, for all you that may have worked or not worked with Jose Luis Morales, hard worker, really dedicated to his clients. I've worked with them on a few deals, really passionate, honest, go-getter, rolls up his sleeves, kind of an old school realtor. So I give my highest testimonial to Jose Luis Morales and his team.
Thank you, Michael. I really appreciate that. Same thing here. So I just wanted to say thank you for allowing us to do this, to work on this together. And for providing this value for not only the people that are right now here live watching it, but in the future, the people that are going to be watching this video whenever they have VA questions. So thank you, Michael. I really appreciate it. And
thank you to all the men and women who served our country. We're honored to have you as part of our family.
Sounds great. Same thing here, Michael. All right, Michael. Thank you so much once again. That's the view right there.
That's the view from my office here at the Ventura Harbor, if you ever want to come by and check it out. So,
sounds great. All right, sounds good. I appreciate it. If anybody has any questions, reach out to Michael Quinn, Sierra Pacific Mortgage. He'll get the job done for you. Make it a great day. Peace.
Have a great day.